Welcome back, YouTube. My name is Nigel Schroeter, and today I'm here to give you guys part one of my series on the pros and cons of cosigning. Okay, so in this video, I'm going to give you part one, and this is going to be the pros section. And in the next video that I give you in part two, we're going to talk about the cons of cosigning. So I want everyone to be aware of the pros and cons of cosigning, as cosigning is something that is a very important financial decision in order for many people to make and choose as to whether or not they're going to do it for someone or not. So I like to give both sides of the equation. In most cases, I'm going to tell you I advised against it. However, I want to give the pros and the cons because I like to be fair on my channel. So if you haven't already, hit that like button for this video and make sure that you hit the subscribe button and ring the notification bell so that you get all of our videos. So with that being said, let's get into it. So the first reason or pro that you get from co-signing for someone is to be able to help a family member or a friend. And this is probably the most common reason for co-signing, is so that you can help a family member or a friend who doesn't qualify for the loan on their own. This could be a child, a sibling, close friend, whoever it is. You're trying to help them establish credit and secure financing for something major. So maybe, it's a car or a home or a loan or whatever it may be. You're trying to help this person obtain credit. And so you get that benefit of being able to help that person. Now, number two, as far as a pro, it can assist with credit building. So, and this kind of goes both ways. And I've told this to people with things like the Navy Federal Secured Loan. Hey, why not apply for it for you and your spouse if you're going to do the secured loan hack? And then both of you are going to get the credit building effect on your credit profile. So co-signing can be a way to help someone build and improve their credit score and history. And the primary borrower, when they make positive payments, both parties are going to get that benefit. So you just have to understand it can be a win-win, but it can be a lose-lose as well. We're going to talk about that in part two. I'm not going to get into that right now. Now, number three, lower interest rates. Sometimes when you co-sign for someone, rather you may need a co-signer. Some people only need a co-signer for the income aspect. Maybe they have a good, strong credit profile, but the bank saying, hey, we need to show more income so that we can lower the interest rate. Or the bank saying, hey, you have the income, but we need you to show the credit to get a lower interest rate. And so doing that, sometimes you can, in turn, lower interest rates. Now, moving into our next topic is going to be joint financial goals. So this one is going to be very important for a lot of the times couples where you, or business partners, where you all are trying to obtain something together. So maybe you are applying for a home loan, and both of you are going to be living in the home, and you want to ensure that both people are getting their financial goals and needs met by having their name on the home. So hey, why not take advantage of that? It may also be supporting responsible borrowing. So moving forward, if that primary borrower has a responsible credit history, like I said, you may have someone who they have the credit history, but they don't have the income to qualify. So now, hey, you know what? I know you're trying to obtain this home because it's actually going to be cheaper than you renting, and you can't afford to keep renting. But if I cosign, I can get you the loan approved so that you can in turn save this, $1,000 a month renting. So hey, why not do that and help the person out if you know that they're going to be responsible? And then once their credit builds up to that point, or their income builds up to that point where they can go and get qualified by themselves, they can remove you off of the loan later. So, in certain cases, it seems crazy, but banks won't lend to somebody who will actually be cutting a financial expense due to their algorithm. So sometimes that's something that you could do. And this kind of feeds right off of the last one, but temporary assistance. So, like I said, a parent might go and they might co-sign for their students' college loans. Then once that child graduates, the loans will, in turn, once they build their credit history and everything, it'll go to the child instead of to the parent. There's so many different things there. That might be the child's trying to get a home or something, and the parent goes and co-signs for them for the home or the business or whatever it is, the car, in order to allow them the opportunity to have that item and have it at a better cost. So, with that being said, and as always, we'd like to thank everybody for tuning in to part 1, and say stay tuned for part 2, where I'm going to tell you all the cons of co-signing so that you're able to see both sides of the picture and how this may or may not be beneficial. And if you're still watching at this point, please let me know down in the comments how you feel about co-signing and if you would or would not do it for someone.